Have you received the new 1099K this year and have no idea why the heck you received one and what you're even supposed to do with it? Well, you're not alone. I've made several videos on the new 1099Ks, the new filing thresholds, and how to report that on your taxes. But in this video, my viewer Dave writes, what's confusing is getting a 1099K for non-side hustle situations. For example, disposing of excess personal property via eBay, personal payments to PayPal that didn't involve sales or services, etc., and how to report 1099Ks that are not side hustle related. A lot of taxpayers will be in for a nasty surprise when eBay, PayPal, etc. start sending the new 1099Ks this year. Dave's right. In this video, I'll answer this very important question because it'll catch a lot of people by surprise, and I'll show you how to report the new 1099Ks on your tax return along with some real-world examples. Later in the video, I'll share my number one reason that you don't ever want to ignore these 1099s. Hi, I'm Noel Lorenzana. I'm a CPA. Follow me for the latest important updates with regards to taxes and the latest happenings with the IRS that affects you. So I'll assume that you're already familiar with the new 1099K reporting requirements, and that is, if you receive payments from, say, eBay, PayPal, or other payment settlement entity, and it's over $600 for the year, you'll probably receive an IRS Form 1099K. In previous years, the limits were much higher, so if you sold stuff online, you probably didn't receive a 1099 and may not have reported anything on your taxes. This year, it's all changed. If you sold stuff online or even received random payments from someone for something, you might have just gotten a 1099 anyway. You may be confused and don't know what to do with it. Allow me to go over a couple common scenarios. Scenario 1. Let's say you sold some old things you had in your garage on eBay. The sales for the year totaled $1,200, so you received a Form 1099K. You don't know what you paid for the stuff, but it was definitely more than $1,200. But let's say you went back and calculated that you originally paid around $5,000 for everything. Here's how you report it on your taxes. In this example, the items were entirely of a personal nature. The items sold on eBay were purchased years ago for more than the selling price. Basically, you would have a personal loss, and the IRS doesn't allow a deduction for these types of personal losses. It's important to note that you still need to report this on your tax return. If you don't, the IRS will calculate the entire $1,200 as taxable income. In this example, it's a personal transaction, so it would be reported on Form 8949 as follows. It's a long-term transaction, so box F would be checked. In column A, you would indicate the description of the item sold. In columns B and C, you would indicate the date purchased and date sold, or for this example, entering various works as well. In column D, you would indicate the proceeds. This should be the same amount reported to you from the 1099K, so we put $1,200 here. In column E, you would enter your total cost, which we said was calculated at $5,000. Remember that I said personal losses are not deductible? So in column F, you would indicate letter L for the adjustment code. In column G, you would enter $3,800, which is the non-deductible loss. Therefore, column H would be 0, or in this case, blank. Done. It's pretty straightforward and works for the fact pattern I've just outlined. A common question that comes up is, what if you have no receipts and have no idea how much you paid for some things? This is a big headache for many people. Technically, in the event you're ever audited by the IRS, you are required to show some evidence of your cost basis, either a receipt, a bank statement, or credit card statement, which evidences what you originally paid for the item. Practically speaking though, most people won't have this information, but at the same time, most sales of personal use items will be at a loss, so we'll have to see how this plays out. Scenario number 2. Let's say that you sold some personal items on eBay, but you actually made a profit. Maybe they were retired Lego sets that appreciated over the years. Let's say the sales for the year totaled $4,000 and you received a 1099K for that amount. You've also calculated that your cost was $2,500. So in this example, you have a taxable gain of $1,500. Here's how you report that on your tax return. In this example, the items were of a personal nature. The items sold on eBay were purchased years ago for less than the selling price. Basically, you would have a gain, a taxable gain. In this example, it's a personal transaction, so it would be reported on Form 8949 as follows. It's a long-term transaction, so box F would be checked. In column A, you would indicate the description of the items sold. In column B and C, you would indicate the date purchased and date sold. Or for this example, entering various works as well. In column D, you would indicate the proceeds. This should be the same amount reported to you from the 1099K, so we put $4,000 here. In column E, you would enter your total cost, which we said was calculated at $2,500. This is a taxable gain. No codes are necessary in columns F or G. Therefore, column H would be $1,500. This number then flows to Schedule D, capital gains and losses, on Part 2, line 10, as shown here. Another question that comes up is, wouldn't this type of scenario be reported on Schedule C, profit or loss from business? My answer is no, not unless you are operating your activity as a trade or business. And by using Schedule C, your risk of audit increases. According to the Form 8949 instructions, individuals use Form 8949 to report the following: the sale or exchange of a capital asset. And according to the IRS, almost everything you own and use for personal or investment purposes is a capital asset. Okay, scenario number 3. In this scenario, maybe someone transferred $1,000 to you via Venmo, but it's not income since maybe it was money that you lent them and they finally paid you back. You didn't think Venmo would issue you a 1099, but they did anyway. Don't ignore it. You want to report it on your tax return to avoid an underreporting notice. Here's how you do it. Box F would be checked to indicate it's a long-term transaction not reported on Form 1099-B. Under column A, description of property, I would put down something like loan repayment reported by Venmo. You can put down the dates, but I'll just use various for columns B and C. Column D, proceeds, you would put down $1,000. And column E, cost basis, you would put down $1,000 here as well. Column H, gain or loss, would be 0, or in this case, blank. That's it. To sum it up, reporting a 1099K that you've never received before can be intimidating at first. It's an inconvenience for sure, but just follow the steps I've outlined to properly report that on your tax return. If you don't report it, you risk receiving a notice from the IRS for not reporting income. This additional information is definitely inconvenient for taxpayers, but once you figure it out, it's not that complicated, except maybe for the record keeping part of it. Let me know in the comments if you have any questions. If you found this video helpful, please be sure to like the video and subscribe if you want to stay connected, and hit the notification bell. I've got another video here which goes over some very important 1099K questions. And as always, thanks for watching and see you in the next video.